With a Bitcoin ETF approval seemingly imminent, many are anticipating huge institutional accumulation of BTC. But what if these institutions are actually already accumulating in secret to try and buy BTC at the lowest prices possible? Today we're going to be looking at the institutional accumulation of Bitcoin, and where better to start than the BTC versus GBTC chart we have here under the portfolio tools section. Now GBTC, if you weren't already aware, is the Grayscale Bitcoin Trust. Now GBTC has existed for a while now as a way for investors to get some exposure to the crypto markets, but GBTC wasn't itself the ETF that many are really expecting to push up BTC's price exponentially with huge institutional interest. And we could see, because it wasn't actually an ETF that was holding real underlying spot BTC and backed one-to-one, it actually underperformed Bitcoin quite notably for a while. If we zoom out here, we can see that at times it was potentially valued above BTC's price, but over the past few years it actually rallied significantly lower than BTC. But that was until recently when we saw GBTC actually start climbing above BTC's underlying valuation. And this is because they've actually been attempting to reclassify GBTC as an actual ETF, with other large-scale institutions, most notably BlackRock, applying for Bitcoin ETF approval. We're seeing many other players in the market try and also get their own ETF approval. But because GBTC already exists and are looking to convert their fund into an ETF, many investors are actually accumulating GBTC in anticipation of an approval so that they already have some exposure. But it's not just GBTC where investors are trying to get some exposure to the crypto markets. If we just go to TradingView here and look at the BTC CME Bitcoin futures contracts, now each one of these contracts represents 5 BTC. And even in spite of a long drawn out bear cycle, we can see on the monthly time frame that there has never been a higher demand for these Bitcoin futures contracts. We can see that this average here has just been growing almost non-stop since the inception of the BTC CME futures. And obviously we had some spikes to the upside as Bitcoin was rallying late into its bull cycle. But now we're seeing very consistent, high and sustained monthly volumes for these Bitcoin futures contracts. Again, probably in anticipation of an ETF approval. Institutional investors are aware that this is probably going to result in a large spike to the upside in Bitcoin's price action. So if they can already gain exposure in anticipation of this potential positive news, then they're in a great position to potentially profit from that approval. And if we just look at something like the March expiry futures contracts from the CME. So these are anticipating what the Bitcoin price is going to be at a given date. So these March expiry 2024 contracts are where investors buying these futures contracts believe Bitcoin will be valued at upon expiry, which at the end of March 2024, close to the halving event, they're actually anticipating a Bitcoin price of over $40,000, which may be undershooting it. But the fact that we're seeing these later date futures contracts priced considerably higher than the underlying price of BTC currently means that they're very bullish on their future price appreciation of BTC. And we can even look at BTC and crypto related stocks. So MicroStrategy, which have been accumulating as much BTC as they possibly can and has been going up exponentially recently. If we just compare the MicroStrategy price action to the underlying price action of BTC, we can actually see that MicroStrategy on a slightly longer time frame has been outperforming BTC. Again, because this is a great way for big, large-scale investors to gain exposure to the cryptocurrency markets without having to potentially deal with the complexity of buying real underlying spot BTC and maybe the easier access through their investing accounts. And it's a similar story for Coinbase. If we just look at the Coinbase outperformance, especially recently, it's been going absolutely parabolic to the upside. This has massively outperformed underlying BTC, again, probably in anticipation of a Bitcoin spot ETF being approved. However, if we look at something like the addresses holding with very large balances, we can see here that the addresses holding at least 100 BTC hasn't notably increased. This has been the same for a number of years actually, with just basically flatlined amount of addresses holding at least 100 BTC for probably 3 years now. So this isn't maybe giving us a great indication that there's institutions buying underlying real BTC. And the same can be true with the 1000 BTC wallets. Although this chart maybe is a little bit deceptive because we can see here that as Bitcoin's price bottomed out, there was around 2,040 addresses holding 1,000 BTC. And even though it looks like a very stark decrease, now there's only 2,032. So only 8 different wallets that decreased their holdings of over 1,000 BTC. And maybe that's actually being scooped up by these institutional investors that are aware of potentially splitting holdings to not have as much of an impact on the underlying price of BTC. Because if we look at something like the addresses holding at least 10 Bitcoin, we can see that from when Bitcoin's price bottomed out, when this was about 151,000, this actually peaked recently at 157,500 BTC. This 6,500 addresses holding at least 10 BTC increase is tens of thousands of Bitcoin that have been accumulating during this fairly boring transitionary period of price action. This has decreased slightly recently as Bitcoin's prices are running up. Maybe people are starting to take some profits. But ultimately, looking at all of these things, it definitely looks like there is some growing institutional interest. And one thing I've been considering recently is due to that Bitcoin hash rate increasing almost exponentially at rates we just haven't seen before, there is an argument to be made that potentially institutions are buying directly from Bitcoin miners. Every time Bitcoin miners mine a block and they gain a BTC reward of currently 6.25 BTC, that's going to halve in April 2024 approximately, down to 3.125. So potentially to not have a huge impact on the underlying price of BTC. Institutions may be buying directly from these miners. We can see that during the last transitionary period from bear cycle into bull cycle, and then even into the bull cycle, every time Bitcoin's price had a pullback or just a long sustained period of pretty boring price action, we did see this dip quite notably. Whereas basically since this bottoming here in July 2021, the hash rate basically hasn't stopped moving considerably to the upside and continues to set new all-time highs practically daily. So potentially new investors coming in, new institutional investors are quite sophisticated. They don't want to just buy BTC on standard exchanges and have a massive impact on the Bitcoin price. They may be slowly accumulating, gaining exposure through Coinbase, MicroStrategy, Bitcoin futures contracts, buying directly from miners to try and accumulate as much as possible without impacting the underlying price of BTC. That way, they're in the best possible position to profit massively upon the hopefully positive news of a Bitcoin ETF approval. Also, if you haven't already, please don't forget to like this video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. And make sure to check out all the resources we discussed today, as well as the many more that are all available on lookintobitcoin.com, your number one source for Bitcoin information. So just to summarize, a number of metrics are pointing towards growing institutional interest and growing indirect exposure to BTC. And looking at the recent outperformance of GBTC in anticipation of an ETF approval and the rapidly growing CME BTC futures trading volume, large-scale market participants are optimistic about BTC, like we could see by the predicted future price from those future contracts, anticipating considerably higher Bitcoin prices than they are today, or at least as I film this. We can also see by the outperformance of Coinbase and MicroStrategy that many investors are trying to get some exposure to the crypto markets in any way possible without having a huge influence on price to try and best profit from a hopeful ETF approval. And even though we're seeing mixed signs from the addresses holding charts, looking at the 100 and 1000 BTC wallets, there were some positive signs from the slightly smaller wallets of 10 BTC that have actually outpaced their accumulation compared to the distribution of those wallets. And while these institutions may actually not be focusing their accumulation on spot underlying BTC, there is, of course, the chance that they're actually buying directly from BTC miners, which is one of the reasons why we've seen the Bitcoin hash rate chart go exponentially for such a sustained period of time. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to professional resolution charts, advanced macro and portfolio data tools, in-depth crypto industry reports, live and personalized indicator alerts, private TradingView scripts, and more, all for a fraction of the standard industry price. And let me know what your thoughts are on potential institutional accumulation of BTC, both down in the comments below and on social media. I look forward to reading and replying to all of them. Thank you all very much for watching, and I'll see you in the next one.